CNBC-TV18.
A great start on Friday to a new financial year, that is FY23. The market is doing just fine. Broader markets in pretty good shape as well. This is the show where we look back at the week which has gone by, but also look ahead in terms of the cues which are lined up as we kick off and look ahead into the future. I'm Prashant. With me, my colleague Sonal Bhutra. Sonal, hi.
Hey Prashant, hi. It was an interesting week, right? But let's go ahead and talk about what we have lined up on the show for our viewers. To discuss the week gone by, we will be joined by Ajay Srivastava of Dimensions Corp Fin Services. And to discuss the technicals for the week to come, we have Jay Bala of Cash the Chaos. We also have opinion that we got through the week from the likes of Manishi Ray Chaudhary of BNP Paribas, Ashwini Agrawal of Ashmore Investment Management, and Mark Matthews of Bank Julius Baer Company. But before we get to that, here's how the markets fared this week. And it was quite an interesting week, Prashant, because we did see a gain after a week of decline. So far, FY22, of course, has been good. And the start for FY23 also has been stellar. Geopolitical concerns eased a little bit. There were hopes of a peace talk to come through for Russia and Ukraine. And that is something that did see some improvement in the markets. Yes, the inflation fears, the rate hike fears, they stay. But nevertheless, markets did see a good start. Nifty this week was up 3%. We saw good gains coming in for Nifty Bank. So that was the one which was a 5%. Nifty Realty, really the one which saw the major gains. So that was the top sectoral gainer this time around, up 6%. The mid-cap index was above 30,000 mark for the first time after Feb 23, 2022. And that's when the entire Ukraine-Russia crisis problem started. All sectoral indices, they closed higher except pharma and metals. That's where we saw some profit taking coming in. The defensives did not do so well. Nifty PSU Bank, that was one sector that saw a lot of buying in today's trading session as well. PSUs in general did see some buying come through, be the oil and gas space, be the power space. All of them were buzzing in trade today. And if we actually look at some macro data as well, GST collections, they just came in and it is at an all-time high of 1.42 lakh crore rupees. So there is some trigger for the next week as well. And we have, of course, something that Prashant will be speaking about during the course of the show. But before we do that, let me go across to my colleague Agam Vakil, who is here to take us through the week's stock action. Agam, which were the movers and shakers this week?
Right, so you just mentioned that we've had a good week when it comes to the benchmark indices, and when it comes to the Nifty 50, well, we do have the likes of M&M, Tata Consumer, Axis Bank, Power Grid and Bharti Airtel, all of them advancing by as much as 7 to 9%. In terms of losers, few and far between, yet some losses for Hindalco, Hero MotoCorp, ONGC and Apollo Hospitals, losing anywhere between 4 to 8%. In the broader markets, a lot of those stocks were interesting, with Adani Power moving up by as much as a whopping 42%. 21% gains for Birla Corp, Polyplex, Lind India, along with JK Cement also advancing in double digits. But what about the losers? Well, we do have 20% declines for something like a Vardhman Textiles. Besides that, HOEC, Wockhardt and Angel One under a tad bit of pressure. But the momentum for this week was clearly with the bulls.
Agam, thank you very much for that look ahead in terms of the wrap out as far as stock-specific action is concerned. Just a couple of things very briefly in terms of what we'll pay attention to when we come back. So you'll get US jobs numbers, right, which the market will pay attention to. It should set the tone in terms of expectations of what the Fed, etc., will do. By the way, the last FOMC minutes of the meeting will be released, and it's going to be particularly interesting. Although we've heard, I mean, a general broad shift in expectations from those on the Fed who were considered historic doves. Everyone is now asking for 25, if not 50 basis points in rate cuts. The Chinese weakness needs to be watched. For the last 2 months, China car sales are down 30%. Now, that is quite astonishing. The focus, of course, has been about these lockdowns because of COVID. But is the Chinese economy slowing down much more? That would mean trouble for metal prices. I mean, and other things, but metals, of course, front and center. Here in India, we have the RBI rate decision, something which I think will be interesting. The RBI, in a way, has tied what it does on rates to its stance. The stance has been accommodative. Will both need to change, or can one change without the other? Something to watch. And, of course, the fourth quarter earnings season, it'll start small as always, but then, I mean, we get into the full flow of the thing as we come back the week next. So just a bunch of things lined up as we get into a new week. Ajay Srivastava is with us of Dimensions Corporate Finance Services. Ajay, great to have you with us here. Thank you very much for your time. How are things looking, Ajay? I mean, for all the noise and geopolitics and everything, the Nifty is slowly but surely inching its way higher. It's the same in the US markets as well. The Nifty is what? 700, 750 points away from the all-time high of 18,604. How do you assess prospects in the near term for the market?
Good afternoon. First of all, I've just come into this thing, and so you must promise me you're not playing April 1 joke by showing me this ticker. Promise me that these are the correct numbers.
No, it's all real. It's all real, Ajay. We're not together. Okay. Otherwise, we could have used the pinch test, but that's not possible. It's all real. Go on.
All right. Okay. I think, see, for Indian market, it's very clear it is liquidity. I don't think the normal retail investor is complicating himself by analyzing the Fed decision, the metal prices, what's global interest rate impact on consumer. The month of March, also coinciding with the tax month, means that almost 40,000 or plus crores of liquidity enters the mutual fund system. Now, it has to find its way in the market. And that's what we are playing out right now. Numbers will come out by the evening, and you can see in the next week as well. It's all going to be mutual fund buying because this huge 40,000 crore liquidity, which comes in the month of March every year, and this year is much more than earlier years. So, so we need to take a view on this market based upon more than fundamental. Is the supply of simple cash coming into the domestic market looking for equity investment? That's the honest answer. If you look at the portfolio-wise, what we should be doing given the macroeconomic data, this is an ideal time to be selling, not buying, in our view. If you got weak candidates, if you need to book profits, this is the time when you can do that in mid caps, in small caps, because there is liquidity. Once the market starts to correct, there's no liquidity. Our belief is that more than 70% of the companies are going to report lower profit, lower profitability than the last year, same quarter, as the results will come out. And the market will correct, will react to that. So our view is this is not the time to buy. These rallies are time to readjust your portfolio, put some cash in the kitty, and wait to see how the results pan out.
Okay, Ajay, good afternoon. You're talking about selling some of your holdings, actually turning your portfolio again. Which sectors do you think have seen their peak valuations now? Where do you think you should take money out from?
I think if you're still in consumers, my belief is that should be taken out. If you're still in MNC stocks as a generic category, I think if you see what happened to Citibank, I'm sorry, but India is a loser when Citibank consumer banking goes out. And not because I'm an ex-Citibanker, but the fact is the service was par excellence compared to any other person. What it is telling you is that the set of people who manage the MNC companies are just not able to compete in the market that is India. And therefore, when you say what should be sold out, consumer companies, in my view, will have a very troubled time. MNC companies as a block, which was a big one, which